If you thought Wall Street was going to kick off this week with fireworks, think again. Stocks barely moved on Monday, leaving the market hovering just under record highs. But don't be fooled, this calm could just be the quiet before the storm. Investors are bracing for two huge events: retail sector earnings from giants like Walmart, Target, and Home Depot, plus a highly anticipated speech from Federal Reserve Chair Jerome Powell at the Jackson Hole Symposium on Friday. Put it all together, and you've got a market that looks calm on the surface but is buzzing with anticipation underneath. Today, we're breaking down what happened in Monday's trading session, what's driving investor nerves, and why the next few days could be critical for the direction of stocks, bonds, crypto, and commodities. Let's start with the scoreboard. The Dow Jones Industrial Average ended the day down just 0.1%, while the S&P 500 dipped fractionally, and the Nasdaq managed to squeak out a tiny gain of less than 0.1%. Not exactly the kind of action that gets traders' adrenaline pumping. Still, those small moves mask the bigger story. All three indexes are hovering near record highs. That means Wall Street isn't panicking, it's waiting. And the reason for that waiting game has everything to do with upcoming economic data, retail earnings, and, of course, the Federal Reserve's next steps on interest rates. Powell's Jackson Hole speech is the marquee event of the week. Each year, central bankers from around the world gather in Wyoming to discuss the state of the global economy, and investors listen closely for clues about the Fed's next move. This Friday at 10 a.m. Eastern, Powell is set to deliver remarks titled Economic Outlook and Framework Review. Traders are hoping he'll shed light on whether the Fed is ready to cut its benchmark lending rate at the September meeting. With inflation still sticky but growth showing signs of slowing, the stakes couldn't be higher. Investors know that a clear signal from Powell could send markets soaring or sinking, depending on the tone he strikes. The Fed's current dilemma is complicated. On one hand, inflation has proven more stubborn than expected, especially after recent wholesale price data showed worrisome signs of stickiness. On the other hand, higher interest rates are weighing on growth and consumer demand. Last month, the Fed decided to hold rates steady, but Powell emphasized that policymakers needed to see more evidence of how tariffs were impacting inflation before making the next call. That comment has kept Wall Street on edge. Will Powell lean toward another wait-and-see approach, or will he hint at the first rate cut since December? That's the trillion-dollar question investors are asking. While the Fed looms large, the other big story this week is retail earnings. This is the season when America's biggest retailers open their books, and the results tell us a lot about the health of the U.S. consumer. Companies like Home Depot, Lowe's, Walmart, Target, and TJX are all reporting in the coming days. Analysts will be watching closely to see how tariffs, inflation, and shifting consumer habits are impacting sales. Strong results could reassure investors that the consumer, the backbone of the economy, is holding up. Weak results, however, might suggest that high borrowing costs and price pressures are finally taking a toll. Either way, the earnings reports will provide crucial insight into how everyday Americans are navigating this economic environment. Technology stocks, which have carried the market for much of the year, had a mixed session on Monday. Meta platforms slid more than 2%, while Apple, Microsoft, Amazon, and Broadcom all dipped slightly. On the flip side, Tesla gained 1.4%, Nvidia rose about 1%, and Alphabet eked out a modest gain. These big tech names have an outsized influence on the S&P 500 and Nasdaq, so even small moves can tilt the indexes. Investors are trying to balance excitement over artificial intelligence and innovation with concerns about valuations that some say are stretched. Monday's action showed just how delicate that balance remains. Beyond the tech giants, a few individual names made headlines. Novo Nordisk jumped 4.5% after the FDA approved its weight loss drug Wegovy for treating a serious liver disease. That approval expands the potential market for one of the world's most popular medications and gave the stock a healthy boost. Dayforce, a human resources software company, absolutely skyrocketed, up 26%, on news that private equity firm Thoma Bravo is in talks to buy the company. And First Solar surged nearly 10%, leading a broader rally in renewable energy names after new Treasury Department guidance on clean energy tax credits turned out to be more generous than expected. Those stories highlight how individual stock moves can create excitement even on an otherwise quiet day for the overall market. Now let's talk about crypto, because Bitcoin remains a roller coaster for investors. On Monday afternoon, Bitcoin was trading around $117,000, up from earlier lows of about $114,700, but down from an overnight high of nearly $118,000. Just last Thursday, Bitcoin hit an all-time record of $124,500 before pulling back sharply as traders scaled back their expectations for a Fed rate cut. That swing shows how sensitive digital assets remain to monetary policy signals. For Bitcoin investors, Powell's speech on Friday could be just as important as it is for stock and bond traders. The bond market also deserves attention, since Treasury yields are closely tied to borrowing costs across the economy. On Monday, the 10-year yield ticked up slightly to 4.34% from 4.33% at the end of last week. That may sound like a tiny move, but yields had been as low as 4.2% just days earlier. Rising yields signal that investors are bracing for the possibility the Fed keeps rates higher for longer. Mortgage rates, auto loans, and business borrowing all flow from Treasury yields, so these small shifts carry big consequences. That's why bond traders are just as focused on Jackson Hole as stock investors are. Currencies and commodities added to the day's mixed picture. The US dollar index rose 0.3% to 98.15, bouncing back from a 3-week low hit on Friday. A stronger dollar can make U.S. exports more expensive overseas, but also helps tame import-related inflation. In the commodities world, West Texas Intermediate crude oil futures rebounded 0.8% to $63.30 per barrel after sliding to their lowest levels since early June last week. Meanwhile, gold futures slipped about 0.1% to $3,380 an ounce. A reminder that safe haven assets are still under pressure as investors weigh rate cut odds. Stepping back, what we're seeing is a market caught between two competing forces. On one side, optimism is keeping stocks near record highs. Investors are hoping for a Fed pivot to rate cuts, stronger retail earnings, and continued resilience in tech. On the other side, caution is keeping gains in check. Inflation data hasn't been encouraging, and policymakers are wary of cutting rates too soon. That tug-of-war explains Monday's indecisive action. Traders don't want to miss out on potential upside, but they also don't want to get caught leaning the wrong way if Powell's message disappoints. Looking ahead, this week could shape the market's direction for the rest of the summer. If retail earnings come in strong and Powell hints at a September cut, stocks could easily push to new all-time highs. But if earnings disappoint and Powell sounds cautious, we could see a pullback, especially in the high-flying tech sector. For investors, that means staying nimble, paying close attention to headlines, and remembering that volatility often returns just when it seems like the market has settled into a groove. So, to wrap things up, Monday's trading session may have looked quiet, but it set the stage for an action-packed week. With earnings from major retailers, continued swings in crypto, and Powell's Jackson Hole speech just around the corner, Wall Street is on high alert. Whether we see new records or a correction could depend on just a few carefully chosen words from the Fed chair. For now, the message is simple. Stay tuned, stay informed, and be ready, because this week could turn out to be a defining one for markets in 2025.